All right, let's talk about the single most important concept in all of business finance. I'm not kidding. This is the fundamental building block, the absolute DNA that lets every single company on earth make sense of its money. Let's get right into it. I mean, really think about that for a sec. You've got one company with millions of transactions every single day, and another with maybe just a few. The scale is just worlds apart. It seems impossibly complex. So what's the secret? How does any business, big or small, keep track of every dollar coming in and every dollar going out? You're probably expecting some crazy formula or a piece of high-tech secret software, right? Well, here's the kicker. The solution is beautifully simple. It all comes down to one core idea, an elegant concept that's been the bedrock of business for centuries. So let's dive right in. In this first section, we're going to see how this one little concept brings perfect, predictable order to what seems like total financial chaos. And here it is, folks, the hero of our story, the account. That's it. It's not some kind of financial wizardry, it's a box. Seriously, just think of it as a specific container for one thing and one thing only. You have a container for cash, one for sales, one for rent. Every single financial thing that happens gets sorted neatly into one of these containers. It's the simple act of sorting that creates all the structure. Okay, but how do we keep all these boxes in check? Well, every single transaction gets recorded in two places, as a debit and a credit. The easiest way to wrap your head around this is that debits on the left usually track what a business owns, and credits on the right track what it owes. This is the absolute core of the double entry system, a golden rule that says for every debit, there must be an equal credit. It's like a financial seesaw, and it has to stay perfectly balanced, always. All right, so we've got our containers, our building blocks. But just like with a huge pile of Legos, you can't really build anything cool until you sort the pieces, right? So in this next section, we're going to do just that. Which brings up a really important question. Is the cash you made selling a product today the same kind of money as the 10-year loan you took out to buy your equipment? No way, right? They serve totally different purposes, and they have very different lifespans, so our accounts need to reflect that difference. And that's where we get the two main families of accounts. First, you've got your temporary accounts. Think of these like the scoreboard for a single game. They track your performance, your revenue and expenses for a specific period, say a month or a year. And when that period is over, you hit reset, you wipe the scoreboard clean, and start over. Then you have your permanent accounts. This is more like the franchise record book. It tracks the big picture stuff you own and owe, and its balance just keeps rolling forward year after year. Okay, so we've got our pieces, we've sorted them into piles based on what they do. Now we need the instructions, the blueprint that tells us exactly how everything fits together. And that blueprint has a name, the Chart of Accounts, or COA for short. This thing is literally the financial backbone of an entire company. It's the master list, the complete directory of every single account that business uses, from cash on hand to office supplies expense. If a transaction happens, it has a home right here. So you might be thinking, okay, it's an organized list, big deal. But it is a big deal, because a well-designed chart of accounts is what makes everything else work. It's how you get accurate reports. It's how you build a smart budget. It's what keeps you on the right side of tax laws. At the end of the day, if you want to make good decisions, you need a good COA. Without it, you're just guessing. And this isn't just some random jumble of numbers. No, there's a beautiful logic to it. It's like a secret code, but a really easy one to crack. Think of it like organizing a messy drawer. That first digit, that's the main category, like assets. The next digit sorts it into a smaller pile, like current assets. And the last few digits, they point you to the exact spot, like cash on hand. See? This simple code transforms chaos into perfect order. Okay, blueprint in hand, code cracked. Now for the fun part. Let's see how all these carefully sorted pieces snap together to build the big picture, the reports that actually tell a company's financial story. It's pretty amazing when you think about it. Every business on the planet, from a food truck to a tech giant, their entire financial story can be told using just these 5 core elements. They're like the primary colors of finance. Every single transaction fits into one of these buckets. Let's do a quick flyby. First, we've got assets. Super simple. This is all the good stuff the company owns. That means cold, hard cash, sure, but it also includes money that your customers owe you, and of course, all the physical equipment you need to run the business. Then you flip the coin, and you've got liabilities. This is everything the business owes to other people. This could be money you owe your suppliers for materials, or it could be a big loan you owe to the bank. These are your debts. And that brings us to equity. So what happens when you take all the stuff you own, your assets, and you pay off everything you owe, your liabilities? Whatever's left over, that's the equity. It's the true net worth of the business, the part that actually belongs to the owners. And last but not least, we have the dynamic duo that tells you how you're doing right now. Revenue is all the money you're bringing in the door from sales. And expenses, well, that's all the money going out the door to make those sales happen. Stuff like rent, salaries, you name it. So, what's wild is that these basic ideas, they've been around for hundreds of years, but how we use them today, that's a totally different story. In this last section, let's see how modern tech has put this entire system on rocket fuel. I mean, think about it. It used to be you had to wait weeks, maybe even a month, to get a clear picture of your finances. But now, with modern software, your chart of accounts is a living, breathing thing. It updates with every single sale, giving you a live look at your company's health so you can make smart decisions right now. And remember that whole double entry debit credit seesaw we talked about? Well, technology has put that whole system on autopilot. Software hooks right into your bank and your sales system, and it posts everything to the right accounts automatically. This just about eliminates human error and makes sure that seesaw is always, always perfectly balanced. And honestly, maybe the biggest game changer of all is reporting. Creating this critical financial statements, well, what used to take an accountant days of painstaking work is now done in like 3 clicks. You can pull up incredibly detailed reports in seconds. It's amazing. And this quote right here just nails it. See, technology didn't throw out the old rules of accounting. It just gave them superpowers. It empowers businesses to use this information to make smarter, data-driven decisions that actually lead to growth. So at the end of the day, this whole thing, it's not really about numbers or spreadsheets. It's the language of business. And once you understand the account, the chart of accounts, you get the blueprint. You get the power to read, understand, and then shape the financial story of any organization. You now have the blueprint. The only question is, what story are you going to build?